I liquidated 4 positions from my portfolio. Also, the official results are in for the performance of the portfolio for the year 2022. If you're interested in that, stay tuned. Hey guys, Kevin Burgess back again with another video. The official results are in for 2022. I'm going to share that with you today, as well as talk about 4 positions that I've liquidated out of my portfolio. And I want to talk about why I did that. But before I do that, I just have to let you know some sad news. My mom passed away December the 22nd. So we've been really involved in those details and all of the process around that. So it's been a little while since my last video, but I'm back and I have a lot of things that I want to share with you, and I'm really excited about today's video. So you've probably noticed that I've got a new backdrop behind me. We actually have recently moved and have bought a farm, and I want to talk about that in a future video. But the point is that the backdrop behind me is a blank slate, and it should be fun to see how that takes shape over the next few weeks and months to come. So I'm looking forward to that as well. And if this is your first time joining, what this channel is about dividend investing. What's really important to me on this channel is transparency. So I will share with you everything that I'm doing. You don't have to join any Patreon or anything like that. Everything that I have in these accounts that I put on YouTube is completely open and transparent. And I think that's helpful not only for you, but for me. And so therefore, we're going to look at today some major transactions that I made as the year closed out. December 30th, I made some major transactions in the portfolio. I want to talk about those, update you on the entire year's performance. I've got the official results in from the brokerage account. So with that being said, let's get started. Before I get into the performance of the account, I wanted to share with you the 4 positions that I liquidated from the account. I've liquidated Verizon, Whirlpool, Main Street Capital, and Prudential. And I know that's a bit surprising for some of you who have followed me for quite a while. You know that these are some of the main positions in my portfolio. However, I've had some stock transactions this year in portfolios outside of what I share here on YouTube. I've got some big capital gains that I needed to have a way to offset. So what I chose to do is in the dividend income account, and you can see here I've blacked out the account number, but in this account, the top 4 losing positions for me as of the end of the year were Verizon, Whirlpool, Main Street Capital, and Prudential. I chose to liquidate all of those. As you can tell, $10,984 loss for Verizon, $2,800 loss for Whirlpool, $2,800 loss for Main Street Capital, and about a $1,900 loss for Prudential, which adds up to about a $17,000, $18,000, $19,000 loss that I'm going to be able to take against those gains. So what this is called, at least in the US, is called tax loss harvesting. And basically I have recognized losses on shares of stock that would then offset gains on other shares that I have liquidated throughout the year. This is important to me because it reduces my taxable income for 2022, and it gives me the opportunity later to go in and maybe purchase these shares back for a lower cost basis. Now, there are some rules around the tax loss harvesting in the US. I'm not going to go deeply into that, but it is important to recognize that in order for a tax loss harvest to work, you can't have any purchases or sales of those shares in the prior 30 days or the post 30 days. So 30 days before the transaction and 30 days after the transaction. So my goal is that I will probably get back into some of these stocks after 30 days have elapsed. But I guess it depends. We will just have to see. I'm sitting on a lot of cash, and I look forward to figuring out what to do with that cash in 2023. So you might ask, well, so you're sitting on all this cash. Are you losing out on dividends? And when I look at the yield of my dividend stocks, and when I look at the yield in the money market that the cash is in, there's not a big difference, especially for 1 month. But what I do miss out on are the potential market increases. So this cash balance that I'm carrying is not exposed to the market. So that gives me a little bit of angst, but at least for now, I'm good with it, and we'll see where it goes from here over the next 30 days. And I will keep you updated on what I buy and when I buy it. So stay tuned if you're interested in that in the future videos. So if you're interested in what I'm going to be buying in the next month or so with this cash that I have set aside, consider subscribing to the channel. I'd love to have you along for the journey. I will again share everything with you. I'll be transparent about it because after all, we are in this together, and I want to share as much as I can for you to inspire you to be the best investor that you can be. Okay, let's move on to the official performance for 2022 for the portfolio. Just some clarification here at the beginning. My dividend income account is a post-tax account, while my dividend growth account is a 401k account. And it's important because these accounts are separate, they're different. So I'm going to show you the official performance for each of the individual accounts. So let's take a look at the dividend income performance. You can see that the 1-year performance for this account was a positive 9.21% on a time-weighted rate of return basis, and this is pre-tax. Now, on a money-weighted rate of return basis, it was 7.21%. Don't worry too much about the difference between these. The only difference is the money-weighted accounts for the timing of which funds went into the account, where the time weighted is it ignores that. It ignores the timing of the funds. And so in order to get an appropriate comparison, you would want to use the time weighted rate of return to compare to any of the market indices down here. So let's take a look at this 1-year return for 2022 is 9.21%. That's compared to the market index of negative 18.11%. So we outperformed the market by 27, almost 27.5%. So I am super stoked about that. It's been a great year for this particular account. And before we go too deeply into the portfolio, let's move on then and look at the dividend growth portfolio performance. And since this one is in a 401k account, I have less access to performance benchmarks, but they do give me, as of December 31st, 2022, the 1-year rate of return is a minus 1.7% for this account, whereas the S&P 500, as we saw on the previous slide, is a negative 18.1%. So even in this account, even in the dividend growth portfolio, we've beat the market by, roughly 16.5%. So it's been a great year for quality, which is what we invest in. And I'm looking forward to 2023 because I think that 2023 will also be a year of quality. I believe that inflation, while it will come down, will still remain high. And there's potential for a recession in 2023 or even in 2024. So I think the markets are going to struggle throughout this year based on that. So really excited about our portfolio performance this year. And like I said, it's important for me that I am transparent. So what I want to do is I want to take you to the portfolio. I want to show you my top 10 winners, my top 10 losers, and my top 10 holdings. So I'm going to show you those three things in the portfolio. I'm combining the portfolios together because I think that's more applicable to the way you would look at it in your own portfolio. So with that, let's look at these details. So I use Simply Safe Dividends to track my portfolio. I have a balance in there. It's not quite $900,000. We ended the year at $899,245. So as promised, let's take a look at the top performing stocks in the portfolio. You can see that EOG Resources here is at 65% gain So that's top on my list. Chevron is second at 61.9%. AbbVie is third at 47.2%. Lockheed Martin comes in fourth at 44.3%, where Aflac comes in fifth at 37.8%. General Dynamics, 29.9%, is number six on the list. Atmos Energy, 25.1%, number seven. Cummins, this is the diesel engine manufacturer, comes in, I think I'm at eight now, 24.0%. Pepsi, number nine at 19.8%. And the illustrious Starbucks, which I only have 3.291 shares, is up 19.6%. So those are my top 10 winners in the portfolio. Now I want to share with you the top 10 losers in the portfolio. You can see here that the top loser in the portfolio is Stanley Black & Decker. So you might ask the question, why didn't you sell Stanley Black & Decker for tax loss harvesting? And that is because Stanley Black & Decker is in my 401k account and therefore would not apply to taxes for 2022. So anything that was in my 401k account, I just left as is. I only liquidated from the taxable account. And if that doesn't make any sense, or if you want to ask questions about that, leave me comments in the notes below, and I'll be glad to respond to those. The second performer, the second, I guess, worst performer is Whirlpool at 27.2% loss in the portfolio. These shares, I liquidated the Whirlpool shares out of the taxable account, but not out of the 401k account. I had it in both accounts. Now I only have it in the 401k account. Google, which I only have 5 shares of, is down 17.8%. Microsoft is down 16.2%. Apple down 16.0%. Fidelity National Financial is down 5.9%. And SOX, which is an ETF for the semiconductor industry, is down 5.6%. Robert Half International down 5.2%. T. Rowe Price down 2.4%. And Texas Instruments down 0.2%. So those are my top 10 losers. I only have one other that is losing money, and that is AT&T, but it is down only 0.1%. So it's pretty much break even. So there's the top 10 winners, the top 10 losers. Now let's look at the top 10 holdings in the portfolio. So Lockheed Martin is the top place in my portfolio. It's interesting that they are 7.3% of my portfolio now, but it is mainly because they have grown so much. They're up 44.3%. So I may actually look at thinning this stock down just a little bit to get it back, into maybe the 5% range or 6% range. We'll see. I'm not really sure. I do like Lockheed Martin, but I want to try to manage the portfolio and limit my risk there, especially with the world geopolitical climate as it is. Maybe it's time to back that down a bit. You can see that Cummins is 6.7% of my portfolio. It had actually grown to over 10%, and I did liquidate some of that a few weeks ago or a few months ago. And so now you can see it's 6.7%, up 24%. Whirlpool is 4.9% of the portfolio now. So I'm comfortable with that position, and I'm also comfortable with Whirlpool. So this is going to be a longer term hold for me, and I'm looking forward to it coming back. I may actually buy some more of that again after the 30-day period for tax loss harvesting. So those are the top 3 positions. The fourth top position in my portfolio is Johnson & Johnson, around 4.9%. It is up 8.5% in the portfolio. Number 6 is Stanley Black & Decker. Number 7 is IBM. And number 8 is Texas Instruments. Number 9 is Microsoft. And number 10 is T. Rowe Price. So I've set some goals for 2023. I'm going to share those on a future video. And in there, I'll talk about how I may juggle my portfolio around a little bit. So stay tuned for that video coming up soon. You'll notice here that in the diversification tab, you can see that I'm a bit overweight in industrials, 28%. I want to target no more than 25% in one sector. So, I may need to thin that out. And if I do thin out some Lockheed Martin, that would help me get back to kind of a target for the sectors in my portfolio. And also by investing cash in some of these other sectors, it'll help the process as well. So that kind of wraps it up for this video. I hope you enjoyed the portfolio review. If you have any questions about tax loss harvesting, or if you want to know more about the portfolio, maybe there's something in there that you saw that you wondered about that I didn't cover, simply ask a question down in the comments below. Be glad to respond to those. So with that, I'm going to see you on the next video, which won't be too long.